In today's weekly Forex forecast, we're talking about the DXY, the Euro, the Pound, the New Zealand dollar, and also the S&P 500, which we don't often talk about, but it is setting up really nicely this week. So I took some time off away from the markets just because the price action has not been ideal. I'm sure you guys have noticed the same thing. And so I've just kind of been laying low and waiting for markets to set up here, which to be honest with you, they really haven't yet. Starting with the DXY, which is still, yes, it's trending lower, but for the most part, it has been very sideways. And this is something that I alluded to back here when we talked about the breakdown from the September trend line. So off of this low, we talked about this breakdown right back here. And what you'll notice is that following the breakdown, what I said on this breakdown was that we could get the DXY just kind of going sideways here, pulling back a little bit, but also just going very sideways and chopping around. This is especially true with all of the tariff talk out of the US. So right now with the DXY, if you guys saw last week's video, this right here should be no surprise. So this trend line off of this high from back here on November 22nd, you can see that this is what we talked about last week. So the DXY closed below this. And what I said in the last weekly forecast was that this area through here should become new resistance. And you can see where this candle on Wednesday, we did get a wick above this. However, the DXY closed back below that 107.10 area. So no change there going into next week. This area is still going to be resistance for the DXY. And we have support coming in down here around the 105.80 to 106 region, which we've also talked about is key on the high time frames like the monthly and quarterly charts. So if you go to the quarterly chart, this is the area that I'm watching going back here to this quarterly candle in April 2022, where you can see we've got highs through here. We've got closing prices through this area. And so this region down here around 106, I think is going to be really critical for the DXY. However, one thing that I think we could see, and this is really interesting here, is if you look at the daily time frame, and let's just assume that this up here is a topping pattern. Okay, so a rounded top here from the US dollar. And if we do that, markets have a tendency to move an equal length of the pattern they just formed. So in other words, if you look here from this trend line down here, which now we know is significant, by the way, because you saw this week, this area serve as resistance. So if we take the height of this pattern from this trend line down here up here to the high, you get an area, or you get a distance of about 2.6, maybe just above. But then if you take that same distance and measure it from the breakdown point, which was this candle, you get an area down here around 104.60. Now, the reason 104.60, and by the way, I came up with this after I had this level down here, 104.60 already drawn. And the reason for this is you can see that on the weekly time frame, we do have a fair value gap, an FVG down here at this candle. So notice these two highs back here. We never saw a retracement into this area. Okay, so this area remains open. Furthermore, we talked about this trend line at the time when the DXY was breaking out back here. So notice how off of this high from back here in 2023, you can see where we had this critical level through here, the DXY broke out, retested it as new support through here. Now notice where this comes in relation to 104.60. All right, so right around this area around 104.60 to 105. So this could be interesting here over the coming days and weeks. Again, I think that 106 is going to be significant where we could see a bounce from here. But 104.60 is really interesting in the sense that if we were to see a move down here into this area, down here into this pocket, over the coming days, this would be a very interesting area where I would expect a bounce from the DXY. Now, one thing of concern that, I will point out here when it comes to the US dollar is, yes, we have the market trending lower and also holding below trend lines like this through here. However, at the same time, you could also make the case that sellers are getting a little bit aggressive, or should I call it brave here, in the sense that off of these lows, you can make the case that we kind of have a little bit of a falling wedge forming here. Now, you could draw it off of this level up here and draw it across the highs, or you could draw it, off of this high up here. But either way, this is getting to the point where it's going to be a little bit interesting just to kind of see, if this right here does produce a short squeeze next week. Even if it's a short squeeze up here to take out this high and then drop down, it's going to be interesting to see if sellers do get a little bit squeezed here with this pattern that's formed. But I think regardless though, guys, I mean, like I've said recently, I do think that these markets remain pretty unfavorable for trading. And that's also why I've thrown the S&P 500 into today's forecast, simply because when you look at the DXY, the euro, the pound, I mean, across the board, markets still remain pretty unfavorable. But bottom line for the DXY, it is still trending lower. We are still getting that correction following the multi-month rally that we saw. So as long as that's the case, I think this is important to respect. So we have resistance coming in up here just above 107 next week, and a support coming in at 106, followed by that 105 area. So next up, we have the EURUSD, which, like I've said, the market is very sideways, and this is the case for a lot of these pairs right now. And the EURUSD is no exception. So this level back here at 104.60 was very significant for the pair back here in this area. You can see all these lows through here. We got the breakdown, resistance through here, resistance once again on this candle. And we even had the fake out back here that I talked about, which produced a selling opportunity. So close back below, retest as new resistance. That was the short opportunity right there. And so far, though, this level is starting to break down a little bit. And this is what tends to happen when markets go sideways. And you can see where, this week we had the close below, the close back above, and now it's serving as support. So the one thing I think is important here for the EURUSD is where it closes this week, because last week did close above 104.60. Okay, so can the euro hold above 104.60 going into the weekly close? That is what's going to be critical for next week, in my opinion. But for the most part, again, I mean, a very, very sideways market and just really not very appealing overall, at least for the way that I trade. Now, one thing that I have talked about recently, if you go to the weekly time frame, we have this breakdown back here in November, and this right here stands out to me, this 2-week period, simply because during this 2-week period, it was obviously a very aggressive drop, and we saw a pretty shallow retrace into this area. So there is an imbalance up here, right around 107, maybe even just above that. And so this area could get filled back here if the DXY heads down there toward 104.60. So that is yet to be seen. We don't know if we're going to get a move that high from the euro, but it is possible just because you can see that down here we do have a potential bottoming pattern. It's not to say that this is the macro bottom, but it could be a local bottom for the euro where we come up here and take out some of these highs up here around 105.33 or so, and potentially take out these highs up around 106.15. So this is that area back here that I was talking about that I would be very interested in if we were to see the market come up here. This could be a range play where, at least for the way that I trade, you could get the move up here into this area. And this, just to be clear, this is not something that I would long from down here, just because, like I said, the market is way too sideways, way too choppy. But if we were to get the euro coming up here and taking out some of these highs, specifically these back here, filling in this area and then failing from there and falling back within this range, then that is something that I would potentially look to trade through here on a short. All right, but we would have to get the sweep of some of these highs back here and the move up there toward that 107 area. Because without that, I really don't want to trade within this chop, because when you think about this as a range play, right, there are several ranges that you could make a case for. You've got these highs back here and these lows. However, for the most part, really, in my opinion, it comes down to these highs back here and these lows. So with the market right here, kind of in the middle, I don't want to trade this. I would love to trade something up here at the extremes if we were to see the market take out these highs back here and then, like I said, fall back within this range. But as long as we're just kind of going sideways here within this congestion through here, I really want nothing to do with the euro at the moment. So GBPUSD is a little bit better than the euro in the sense that we are getting somewhat of a trend following the break above 125. But even this has still been pretty sideways this week. We have seen the market climb above 125, so this key level back here. And we've also seen it now climb above 126.17. So you can see this area right back here. We've got these lows, we've got these highs, and right now this is currently support for the pound. Now, like I mentioned with the euro, one area that is of interest here on the pound is this region up here around 128. So specifically, if we were to see the pound come up here and test these highs and also sweep those highs to fully retest the lows back here from November, remember, this was that very aggressive breakdown. And even though we did see a retest, a backfill of this area, we did not see a complete backfill of those lows from early November. So if we were to get the market up here into this region, I think that would be very interesting for a short. No guarantee that we do see the market move that high. And just like with the euro, guys, I would not try to long this simply because this is not how I trade. I'll show you exactly how I trade when we talk about the S&P 500 at the end of this video. It's a very specific way of trading, but it's something that is a very high probability as well when they do set up. And right now for the pound, the euro, really a lot of these markets, they're just not setting up in a way that is conducive for my trading style. So again, for the pound, we have support coming in down here at 126.17. We've got resistance up there in the 128 area. And we also have this channel right here to keep an eye on. So we haven't seen a retest of the top of this channel, but I would be willing to bet that if we were to get the pound moving up here into this level, that sellers would be looking to defend this, okay, as symmetry off of these lows, right? So we'll see if we get that, sometime next week. But again, I would really, if I'm going to look for a trade here, I want to see the market come up here, take out this high back here, and look for something up here in this region. So next up is the New Zealand dollar, which is also, like a lot of these markets, is very sideways. However, it is coming off of a really significant level that goes back here to late 2022. In fact, we've got two lows going all the way back to this low back here in 2020. That was obviously the COVID low. We had this low just above that, and you can see where the New Zealand dollar did test that low here recently. Now, the one thing, though, that I do want to say about this, because when you see a market testing lows like this, right, you tend to think, okay, this is going to be potentially a macro bottom for the market. And it could be, but one thing I want to point out here is the fact that, first of all, you have the market, and this is very macro. I get it. It's not really very tradable, at least on a day-by-day basis. But overall, you have the market kind of making these lower highs into this key support area, right? So that's first and foremost. And secondly, if you'll take a look at this recent bounce and compare it to this one back here, what you'll notice is that back here, this was very aggressive. This was very much a V-shaped bottom. And what you'll notice back here is the market has kind of taken its time and going, sideways here for the most part. So it's a very different look to what we saw back here. And you could even make the case, I haven't compared this yet, but you could absolutely make the case that back here, right, on that COVID low as well, very much a V-shaped recovery. This one, not so much. The market is just kind of churning sideways here within a channel, an ascending channel off of that low. So again, guys, the jury is out on what we get here. And this is the case for a lot of these markets that are just mostly going sideways. But one thing I think that we could see from this market is the rotation lower from this area. And the reason I have several levels up here is, first of all, you can see where we have this high from back here in October 2023. So this is what the New Zealand dollar is finding resistance at so far this week or last week. And then if you go to the weekly time frame, we do have a bit of an imbalance up here in this area that was never tested. So we have first this low right here, which you can see it was kind of tested here on this high. We could still see a sweep of that though. And then you've got this low back here, which was never tested on the weekly. So this entire area is going to be resistance for the New Zealand dollar. I would personally, if I were going to look for a short here, I would like to see a move into that area. No guarantee that we do get it. So, basically a move back here into this congestion, right, before you look for a short. And this also depends on the DXY, right? What does the DXY do in relation to those levels we discussed? And if you look at the 4-hour time frame too, what I would watch for next week, and this is kind of interesting because this is obviously all within the context of this ascending channel. So again, a very sideways market. But I would be watching to see how the market reacts to this high right back here. So you can see that on the way up, right, within this ascending channel, you can see these highs back here. This became new support where we never got a 4-hour close below. Now, this is the top of that channel, and you have this high over here. So what's going to be critical, in my opinion, for the NZD next week is going to be how does the market react to this area? Okay, so if it closes below today, and that's still a big if because we do have a couple hours left here in the session, but if the New Zealand dollar does close below this high back here, this closing price, right through this area, then how does it react to this on Monday? If it does find selling pressure up here, we could get that pullback down here to these lows and a resumption of this ascending channel. All right, so just something to watch for next week. Again, it all depends on what the DXY does though. I'm not a huge fan of trading these markets, which, again, is why I have included the S&P 500 in today's forecast, just because I think the S&P 500, when you look across the board, across all these markets, in my opinion, the S&P 500 is showing the most promise. All right, so let's talk about the S&P 500 since I've alluded to it now a few times in this video. And by the way, guys, if you do want to join us in VIP and see the trade that I put on today in real time, be sure to check out the link in the description of this video for 85% off lifetime access. Or if you're on the website, click on that join VIP link. So I do announce my trades in real time in there, and this was no exception. So I put on a trade from right through here, a short trade, right through here, stop loss up here well above the recent high. And the target here in this case is the range lows down here, but specifically this high from right back here. So what you'll notice is that we never got a full retest of this high back here. Okay, so I'm looking for, over the coming days, for the S&P 500 to test areas like 6K. This is going to be support next week, and also potentially 58.77. So this is the way that I like to trade, guys. And this is, why I'm saying that a lot of these markets aren't really setting up for me, just because I like to look for stuff like this right here. So this right here, right on the retest, although like I said, we never got a full retest down here. If the market had retested this after breaking above like this, that right there would be a buy for me. This up here was a short. In fact, I did short the market up here following this right here. You can see we got a retest on this candle, retest again through here. So both of these were good as short opportunities, especially that first retest. So this is how I like to trade. You get a market that establishes some really nice clean levels, and then you get these sell side and buy side fake outs, right? And this is essentially where down here sellers get trapped and up here buyers get trapped. So we saw the same thing happen here this week. And the reason I put on this early short, I kind of front ran this position, to be honest with you, because really this doesn't set up until today closes below this area up here. And I was front running this just because I did kind of have a feeling with all of the options that were expiring today that this could happen. And so I kind of knew that there was a chance that we might not get a retest up here. Now, keep in mind, we've got support down here at these lows next week. So early next week, we could very well see a move down here into this area, followed by a bounce back here toward this level before we get the move lower. All right, so keep that in mind. This is not something you want to chase, especially into all of these lows. But the idea for me, guys, just to kind of, show you how I trade or how I was thinking about this is, again, this right here, I was front running this position. And this is the first trade I put on all week, mind you. I haven't been trading these markets just because they have not been very favorable at all. But I stepped into this today short through here. And I was doing that because, again, I wasn't confident that we were going to get a retest up here in this area, anything favorable at least, although we still could. And I always have the option to add more to it next week if we do get a retest up there. All right, so I have taken a little bit of profit on this, really nice move today. The only reason I did take profit, or at least a little bit of profit today, is because of this 1.7% drop. This has been a very aggressive move, and one that, we could see the market kind of retrace a lot of this early next week. All right, but for the most part, what I am looking for, as I mentioned at the start of this, is following this buy side fake out. Okay, very similar to this one back here. What I'm looking for now is the S&P 500 trading back within this range, so which means this is my first target down here at 6K. And what I'm really looking for is for the market to take out these lows and give us that full retest down here that we never got following this buy side fake out. All right, so that's basically it. I mean, going forward, you've got 6K support down here. This week's move does look like a buy side fake out now, where we have this area around 6,100 coming in as resistance. Again, 6K is support, followed by 58.77. Subscribe to the channel and click the bell for notifications. Don't forget to join us in VIP. Claim your 85% off lifetime access. See the link in the description of this video, or if you're on the website, click on that join VIP link. Have a great weekend, and I will talk to you again next week.